What's up, YouTube? It's Brendan from Market Makers. It is 10:30 Saturday night, cold and rainy here in Florida. Guys, we're going to walk through WYCKOFF because I want to show you how to use Fibonacci. A lot of you are asking in the comments questions about specific tools. So the way I use WYCKOFF, the way I use Fibonacci, I marry trading styles together. The best analogy I can give you is WYCKOFF is the car, Fibonacci is the engine, okay? So WYCKOFF gives me the structure of what I'm driving, whereas the Fibonacci gives me actually how I move from point to point, placing my trades, okay? So let me show you the best way to do this because a lot of people can do this. Anybody can download a WYCKOFF schematic and try to find the elements of each phase here and plot them on. How do you actually trade them? How do you find your support resistances? Sure, you can do it the normal TA way. You can draw boxes, you can draw trend lines, lots of different things. You can use indicators, moving averages. Let me show you how I do it with Fibonacci so you guys can do this at home. You can impress the friends and neighbors. All right, guys, let me zoom out real quick so I can show you what we're going to do here. I'm going to look at the reaccumulation box right here. I'm going to look specifically at the down thrust and the reaccumulation to the up thrust and distribution. I'm going to show you some confluences here, and then we're going to repeat this. I'm going to look at the down thrust and this accumulation box to the up thrust and the reaccumulation box, okay? I'm going to keep showing you some confluences, and you can see how you can dictate the trading range, how this will help you with your trades. I think this will be very beneficial to everybody that's interested. So let's look at this. So let's go to our down thrust, the lowest candle in the trading range for the reaccumulation box, okay? Right here, down thrust candle. And we're just going to use a standard Fibonacci retracement for this. And I'm going to pull it all the way over to the up thrust candle right here. You see that? So I have it pulled all the way over. Look at your 1 fib, okay? That's your 1 fib on your down thrust candle. Look at the 1 fib over here for your accumulation box after Bitcoin fell apart, okay? Because remember, what happened here in the steps? Let's walk through this really quickly. You have your down thrust, you roll over for your spring, okay? Last point of support, back up, strong sign of strength. Preliminary test of supply where they dump some supply to test the market. You can see that here. Buying climax candle, automatic reaction, secondary test of your ceiling. Strong show of weakness already. You see that? And then price climbs up to the up thrust, the previous all-time high, immediately followed, which happens often in WYCKOFF method. If you have a big up thrust, immediately followed by a strong sign of weakness, okay? All the way down, knocking you all the way down. Retail rallies the price. Last test of supply, and then you get a sell-off, a dump of supply. Preliminary test of support. You can see the support candles here, confluence with that, and then boom. The trigger is pulled, the rest of supply is dumped on the market, bringing you to your selling climax candle. What's fascinating about this, just first step, okay? What's fascinating about this candle got to 28,980 on BitGet. Look at the fib, 28,892. $90 difference, and you could have pulled this fib as soon as you had the all-time high on April 14th. And you would have had the selling climax candle on May 19th, a month ahead of time. You could have predicted exactly where this candle from the selling climax would go. Not just that, the down thrust candle in the range too, 28,797. And what again is the price over here? 28,892. $90 difference again. $90 difference on almost a $29,000 asset. You got within $90 the selling climax candle and the down thrust candle. So let's see if this cycle repeats, guys. You guys can decide as I walk you through this, is Bitcoin falling apart or is Bitcoin holding key support? And you can use your fibs. So let me walk you through this again. So what we're going to do again, the same exact thing, guys. Turn on the weak magnet. Let's go ahead and pull just a simple fib retracement from the lowest point in the accumulation box to the up thrust candle in the reaccumulation box. Let's see if we find any confluences here. So let's go ahead and do that. All right, so what we have here, look at where your backup formed on the 0.5 fib. Look where price is now on the 0.5 fib, okay? That's important to note when you see that. Moreover, but let me zoom out real quick and show you this. So what we're looking at right here is the down thrust candle and the up thrust candle, okay? Even though these are on different levels, you still get confluence with your fibs here. But let me show you this when I compare this apples to apples, reaccumulation to reaccumulation, okay? Let's look at that. So we had the one fib from over here, right in this range, the one fib from the down thrust lines you up the selling climax candle and the down thrust candle. Let's see what happens in this reaccumulation box with the backup. So let's go ahead and pull a fib from the down thrust candle in the backup right here. Again, we're going to go to the up thrust candle, the all-time high, and look at this. Look at your one fib. Look at your down thrust candle on your one fib. So your one fib provided key support. Do you see that? Your one fib provided key support from reaccumulation, and this is so much data to show you. This is why people do Wyckoff on the daily or weekly, because it's a lot of data. So the one fib provided you key support, guys, over here where it started, pulled over here perfectly, provided key support from here to here once again. So every single accumulation cycle in Wyckoff has held the one fib. Do you see that from the previous accumulation box? Very important to note when people are telling you this is falling apart, okay? Very important to note. You know when it's falling apart? It's probably when you lose that one fib, and I told you this previously 2 weeks ago, 39,596, okay? That's a big danger zone because no previous accumulation box lost the previous one fib when it's dragged over. Just some key confluences to look at. But I want to show you some other cool things here at Fibonacci, guys. And I hope you guys are enjoying this. If you are, please go ahead and smash the like button for me because I know this is a different type of TA and not everybody appreciates this type of TA. But let's look at how another question that could come up. How could you have got this market top? Is there any way predictively you could have nailed this market top, right? Something to show you this trading range, because if you look at this, this is a lot, right? So you got several peaks here of high volatility. As you guys know, Bitcoin's super volatile, the most volatile asset in the world. And you got all this volatility. Is there anything that could have done this for you? Because if you were just using trend lines, what would you do? You just draw a trend line, right? You'd be like, oh, this could be a top, this could be a bottom, and again, you have a big range. But what if you did this, guys? What if you trade Phi style and did this? What if you took your trend-based fib, again from your down thrust candle, let me put my magnet on, again from your down thrust candle, and let's go up to our first peak. Now, we're looking back in time, so all these other candles are already formed, but if you were trading this live, okay, and you got to this first peak, and you got to that first bottom, this is what you could do. You could take your trend-based fib, down thrust candle to your current peak, and then to your current bottom. Look what this does. Look how this encapsulates the rest of the price action. So just from this point on, from March 1st, you would have had from March 1st all the way to May 13th. Do you see that? March 1st to May 13th for the dump. And you say, well, what benefit do you get from this? Well, guys, Fibonacci trading is all about pivot points and price and shows you potential support and resistance, right? So look at this. Let's just walk through this for 1 second, okay? So what you have is you have your first peak here, and at this point you're just looking to the future, okay? You want to know what's going to happen with price here. Look how this all respected the fibs. This is the 618. Do you see this? This is also the trend-based fib, the 618. No candles closed above the 618 except the up thrust, which they're supposed to. That's the point of the up thrust, is to stop everybody out, to really stick at the retail, to get all the shorts out of there, and to get a max bull trap. So everybody's buying here thinking 75K, not whatever this price was. What was it, 68K, 69K? 65K. I'm getting my prices mixed up. 65K. They want people to think 75K, and then they dump supply on the market after the up thrust. That's why there's always a huge sign of weakness after an up thrust, because they're like, ha, got them. Pull the lever down, and then all the supply dumps out, and you get dunked on, okay? The shorts got stopped out, and the bulls got in a bull trap, okay? That's what that is. And if you don't understand the Fibonacci principles here, this gave you the trading range. And if you look at this looking backwards, you guys need to always go back in your charts and analyze the price movements, okay? Because if you analyze the price movements, you can see, hey, you know what? I should have been able to see this. You know why you should be able to see this? Because you have your 618, which is your ceiling. Not even your buying climax candle closed above your ceiling, okay? Your automatic reaction. What did your automatic reaction do? It came down and tested the 382 fib. Do you see that? It came down and tested the 382 fib, went back up for your secondary test of your ceiling, confluence with these candle group right here, and then look at the immediate sign of weakness. After you get that secondary test, you fall down below the 382 fib. That should be a light bulb. Hey, wait a minute. This is really volatile. This fell down too fast. We didn't hold the support that we previously tested twice already, the third time we fell through it. So immediately it gets bought back up. The euphoria in the market psychology, guys. Retail gets really excited, buys it back up. It falls down in support again, and then you get that euphoric rise of demand and, of course, the dunking, okay? And the key thing to understand here with the dunking, where did you fall to? The 382. Do you see how many times this was used as support? I mean, you could count. These are daily candles. That means if you go to the 4-hour time frame, you would just see what, dozens of candles that are just hitting the 382 over and over again. And what should set you off is when you see this. Closings below the 382, okay? Then you get that last rally, that last test of supply. You get demand and supply, but the thing you have to realize, lower high. This sign of weakness right here after this up thrust dropped you below the 382 to down here. This is a huge sign of weakness. This is when you have that little relief rally. Now that you guys look back on it, when you analyze this, when you understand Fibonacci concepts, Phi techniques that I teach as well, when you understand this, this was the ultimate time to get out. Okay? If you got in on the bull run and you wanted to see how high this puppy could get, that up thrust with that huge sign of weakness that dropped you well below the 382, you got that relief rally back up. This was your last chance to get out, and it lasted for days. And I know there's a ton of traders, new traders, people that just weren't paying attention, people that have lives, unlike me, and they have wives and kids, and they go out with their friends. They weren't paying attention, and this is when you should have got out, right? And again, you can use moving averages for confluence, such as my 55 here. Look what happened, okay? As soon as this happened, look at the wicks of your candles. Supply is outpacing demand, and then you can see it in this candle. This candle is the very last chance to get out, and after that, it was a huge dunk fest. And then right here is when you could have got out, last ditch effort, because this is your preliminary test of support. You had candle confluence here where once again people were like, hey, is this going to hold again so we can push this back up? Because people wanted it to do this again, right? And it didn't do that. It just dropped the bottom out and you fell all the way down to 28K. So this is something to look back. Always review your price action, play with your fibs, and see where you could have got to. Guys, we're going to get to current Bitcoin price, okay? Sorry, I get carried away on this. This video might be long, but again, tell me in the comments if you hate this type of TA because there's not a lot going on. I thought I would teach you some techniques, how I trade, so you can see some of this. Guys, could we have predicted where we're going down here? That's another thing, right? You can always, as what I do as I'm trading, I'm constantly moving my points. Imagine some of these candles haven't formed yet, right? We just made this all-time high, and we just made this scary low, and then we got candles up here. What would you be thinking? If you don't know anything about support resistance, if you don't know anything about WYCKOFF, about how this is the last test of supply, if you knew something about Fibonacci, what you could have done is this. You could have done a simple trend-based fib from your all-time high to your swing low there to any one of these candles. Any one of these candles to see what's going on here, okay? Let's just say you got that last candle, okay? You got that last candle, and again, look how your fibs lay out. Do you see how your fibs are laying out? You're 618. You're holding this level. You fell through this level, and then look again what your trend-based fib did. It basically gave you another box. Again, it's from up here, okay, of where price is going to be trading. And then you constantly move your trends forward, constantly check these swings back and forth with retracements, and you get more information about price, okay? Very important to do that. So where does that take us to? And it takes us to here. So I showed you the one fib being held as key support. I showed you how to analyze these tops, these swings in the market that you see in Wyckoff using Fibonacci. So what should we do now? Let's just click through some charts and see what's happening in price. All right, so the dollar, guys, I went over this a little bit in my last video, had some requests to do a little bit more. Not a lot's changed, obviously. So what happens in the dollar, guys, being, look at Wyckoff can apply, because again, what is Wyckoff, guys? The market can only move three directions. The market can move up and mark up, down and mark down, or sideways. And if you're sideways, what are you? You're either accumulating or you are distributing. And if you're distributing, that you're selling. And remember, both sideways markets is about control. That's about big money. Never tell me smart money. That's about big money controlling the range of which they're trading so they can dump as much supply at the highest price possible, or so they can buy as much at the lowest price possible. That's all Wyckoff is, guys. This is the dollar, okay? The DXY. You're not trading on this. This affects Forex pairs. This affects the stock market. This affects everything, okay? This affects Bitcoin, obviously. But we have the same thing. We had the last test of supply, preliminary test of support right here, and then the dollar fell. And the dollar fell down, and we had our automatic reaction. This is where we're at now, and it's not, the index isn't open right now, so you're not seeing anything new here. But, you know, this is all the same thing, guys. If you take your trend-based fib, let's go from our lowest point here, our spring. Up to, is our up thrust higher? Nope. Up here at a buying climax candle. And then let's go down here. Where do I want to go to take this to? Oh, projections. So let's go down here where we're at right now in price. So in price, what we're looking at for the dollar to rebound, people are asking me what I expect the dollar to do. The dollar, if it does rebound, it found key support also on Gann Square 9 here. And key support, I'm looking at a dollar at the 1618, which would be, I think, 100. Yeah, 100.579. How long would it take to get there? It could take a while. Right now, you're doing the automatic reaction phase. You're going to walk through all these steps in Wyckoff. You just had your selling climax. You're going to do your automatic reaction. You're going to have a secondary test of your bottom here. It depends how volatile it wants to get, but you're going to see it range, and then you're going to see it do some type of spring or some type of move up and go through all the motions again. Okay, this could take a while to do this, and again, a lot of this, guys, like I talked about. What is inflation? We are inflation nation, but inflation is literally inflating the money supply. If you have too many dollars, the dollars that are in circulation are worth less. 36% of the money that's currently in circulation has been printed since COVID. 36%. We've increased our money supply 36%, and that's why realized inflation is over 15% for me and you and everybody else. If you pay rent, if you buy a used cars are up 27%. It's actually much higher depending on what you're buying. But that's the dollar, guys. I do anticipate it getting more bullish once the actual taper starts, which is in March. Okay, until then, highly volatile, but it will start making some consistent progress up once again. So Bitcoin is on a clock as far as the dollar goes for what that's worth. The dollar could affect it a little, a lot. Obviously, the market is separate, depends on euphoria and lots of market psychology. So we talked about this pattern, guys. I went over this a couple days ago again. And again, this is just my very in-depth TA that I'm doing with my cutout. So this is our fib time again, January 18th, guys, our 8-bar confluence here, and we're just waiting to see what happens here. Once we get to, we may not pump up to 46 before we hit this fib time. The way the price action looks, it looks really flat, so we may not pump up to it. But let's go ahead and look at a smaller time frame. Let me see what I have here. I showed you guys the shark last time, and there's that EMA death cross. Again, we could just roll over and start pumping back up, or we could get some bullish candles. But let's see what we're doing on the 4-hour time frame. 4-hour time frame, guys. This is a couple of different patterns, okay, on the 4-hour time frame. First of all, when I look at this, I always see this, okay? This is your cut base. And this will be what I want to do here. Oh, price time. So this is a couple different types of patterns. Okay, this is also a volatility compression pattern. And what you get with a volatility compression pattern is you get V waves. Okay, you get volatility waves in price that contract. So Elliots came up with this pattern. He called it a saucer and plate, and O'Neill called it famously a cup and handle. Okay, so what you get with these contracting waves is you get price compressing, and then eventually exploding up. And I don't know where this is going to dip to, but you get price compressing and eventually exploding up, okay, if it is a bullish pattern. And it's forming as a bullish pattern, and there's a couple different ways to look at this, because you had this cup dip, okay, and then you could put your resistance line. Some people put it over here. I usually put it up here because I want it to break a higher trend line. A couple different ways to look at this. What you're actually doing here, just basic TA level, okay? You're making lower highs. This is also called a VCP, volatility compression pattern. This is how I trade it. So whether you think this is not a cup and handle because, oh, it's a downtrend, it can't be a bullish pattern, that's not true at all. You get reversals off of bullish patterns and downtrends. But if you do think like that, then if nothing else, it's potentially a series of lower highs, and you could have 3 rising valleys, and this would be on the 4-hour time frame. The larger time frame, the more powerful. 4 hours good for patterns. So if this holds up, and we don't roll too much because of the death cross, we could roll, and this may not hold up, and you may come down here. This would be a nice little pattern. But let's go ahead and look at a couple different things here. Let's go ahead and look at our indicators. Let's look at ICHI. I have a feel, I don't know how long I've been talking, but I feel like it's probably been 20 minutes. So you guys are either going to love this video or hate it and be like, please never make this video again. All right, so ICHI. What are we doing on ICHI? ICHI, we got above our moving averages on the 4-hour time frame. We're trying to hold it. We're slipping through it. But the most important thing about this is not this mess here, okay? Nobody cares about that. Do you guys see what the most important thing is here on the screen? The most important thing on the 4-hour time frame, because remember, this is a battle of yards. We want to make progress in smaller time frames that filter up into larger time frames, is the actual cloud. See how thin the cloud, I mean, that's extremely thin. I don't know if I've seen a cloud this thin without turning green. Look how extremely thin that cloud is. And what that tells you is ICHI's telling you resistance is weakening. Resistance is weakening. Price is behaving in a bullish fashion in this uptrend. Even though it doesn't look like a lot, it's actually minimizing weakness. So what this can do is we could have our price roll over. Remember, it doesn't have to roll over. And as long as we hold our key support, and actually, you know where I think price is going to go? Again, let's use some Fibonacci. Where I think price could go here, people ask me, where could it retrace to with the death cross? Now, this would not be a deep retracement, keep in mind. I mean, death crosses can be lethal, but they also don't have to be lethal. This is where I think price would go, to the 618, 41,444, which means you could see price do something like this. You could see price just go like this. Whenever that death cross actually happens, it looks like it's going to happen this weekend for sure, depending if we get more upward momentum or downward momentum. But you could have price come down to the 618 and then make some candles, consolidate, boom through here, okay? Because there's no resistance here on the 4-hour time frame. Where you're going to have resistance, your first stop, it's going to be right there at that bearish pattern that I showed you guys at 46-ish, okay? This is on BITGET, so 46.5-ish. Now keep in mind this descends slowly, but it descends. It comes down to price. So let's say 46.5-ish as of right now. That's where you'll find resistance. The key thing is when that death cross happens, because obviously it looks like it's happening on the daily time frame, okay? When that happens, and again, I'm tracking the EMA death cross, guys, not the simple moving average. I don't trade with simple moving averages. So I'm tracking the EMA death cross. When that happens, we need to hold our key support. If we hold our key support, which basically I told you is the 39,596, we held it last time. We got the 39,610. It got close. It got close. $14 close. But we held it last time, but we don't want to fall below 39,596. As long as we can hold this, that means price can come all the way down here and retest it. And I know people think it's crazy when I talk about this, but guys, it's real because we've done it every single time. This is what I want to show you again. This is your reaccumulation box, okay? This is the reaccumulation box. There is your buying climax, selling climax candle. Look at this. Your reaccumulation box right here. Your selling climax candle. Do you see that you follow the exact same pattern? Look at this. You have the candles right here, automatic reaction, secondary test. You trade slightly higher in range. You trade slightly higher in range, and then you dip in range. You dip in range. You see that? And then this is what you want. That part. That's what we're waiting for, is that part. And we got all this after the last death cross. And that same pattern repeats, as you guys know, in every single accumulation box. They all do you can go to the reaccumulation box way back in the beginning of the bull run. It has the exact same steps as this accumulation box. This accumulation box has the exact same pattern as this accumulation box. They all repeat, guys. Patterns repeat. Wyckoff knew this. His steps are important, and being able to TA them with Fibonacci really makes it easy to find support and resistance and really enhance your trading. So I hope you guys enjoyed this. I have no idea how long this is, so I apologize if this is like 30 or 40 minutes. I'm uploading it. So if you guys like it, tell me you liked it. If not, just be honest, say, hey, I'd prefer your other TA, and we'll go back to the basic stuff again. But all right, guys, happy trading. If you guys want to check out our room, I teach like this. We have videos. We have professional traders in our room that teach Phi concepts, Phi techniques, Fibonacci patterns. We teach Wyckoff. We teach everything in our room. So if you guys are interested, the Discord link is in the video description. The exchange that sponsors us, BitGet, is in the video description. Get all the bonuses with our link. All right, guys, happy Saturday night. I'm done talking. I'm tired. Happy trading.